Welcome back to BitTalks, the podcast that brings you daily news on crypto and blockchain. My name is Brandon, and I am your host. Today is April 1st, 2019, April Fool's Day. We at BitTips would like to remind our listeners, don't be a fool. Write down your recovery phrase. Control and safely secure your private keys. We cannot stress the importance of having full control over your private keys and recovery phrase. We recently saw another exchange hack against BitHum for over $20 million. It is extremely important that all owners of cryptocurrency keep their coins and their private keys secure. Take the 5 minutes to write down your recovery phrase and store your private keys safely. On today's episode, we will be discussing a number of topics, including Coinbase and its new model for attracting investors, Bitmain and its IPO application, how the ICO market performed in quarter 1 of 2019, and can blockchain revolutionize the remittance market? So kicking things off with Coinbase. For those who don't know, Coinbase is a brokerage platform where people are able to exchange fiat currency in exchange for cryptocurrency. In an attempt to attract institutional investors, Coinbase has announced that it is going to launch a program that is going to pay institutional investors between 5 and 8% in interest payments when they park their money in Coinbase's custody service. The program, called staking, comes with a crypto twist. The interest is only earned if customers are holding certain cryptocurrencies, and the interest will be paid in those cryptocurrencies. Institutional investors have historically shied away from the crypto markets. They have cited that the markets are notoriously volatile and that they can't predict what will happen with these assets. Using this staking concept, Coinbase hopes not only to attract investors, but also to strengthen the network. Staking is a concept known as proof of stake. Unlike Bitcoin and Ethereum, which run using proof of work algorithms, proof of stake is a bit different. Proof of stake uses less energy, and in exchange for having capital in storage and using computer power, users of proof of stake are promised a payout in newly created tokens proportionate to their investments. Coinbase's service is going to take these payouts and turn them into regular, recurring payments for investors. Bitcoin has long been known to be very energy intensive. The proof of work algorithm that Bitcoin uses forces computers to solve a complex math riddle, which becomes harder the more users participate in the network. Both of these methods are intended not only to incentivize people to participate in the network, but also to strengthen the network and prevent malicious attacks. Coinbase's revenue model with this new system is quite simple. Coinbase will be taking 20% of newly minted cryptocurrency. The company is also exploring other ways to monetize assets that are in its custody service. Last summer, Coinbase announced that it had over $600 million in assets stored away in its custody service. The staking service will only be available with the coin Tezos, T-E-Z-O-S, which launched last year. Other cryptos will be added at a later date. Hopefully, the attraction of institutional investors will also bring greater adoption into businesses. A recent survey of IT execs from KPMG reported that 48% indicate blockchain will likely change business practices, and 41% said that they're likely or very likely to implement blockchain during the next 3 years. So moving along from the last 3 years, let's talk about the last 3 months. Today begins the second quarter of 2019. In quarter 1 of 2019, Bitcoin was actually quite bullish. If you look at the monthly chart, Bitcoin experienced 3 consecutive green candlesticks, meaning that Bitcoin ended the month at a higher price than it began. Some analysts feel that this could be a signal that the bear market may be coming to a close. Time will tell, and we will keep our eyes on the moving averages to see what is going on with the crypto markets. While Bitcoin was doing pretty alright during the first quarter of 2019, the ICO market did not do so hot. Some analysts feel that the ICO market is currently dead. Startups raising money via ICOs brought in just $118 million during Q1 of 2019. During the same period in 2018, companies raised over $6.9 billion. That's a very stark contrast. It is no secret that a lot of ICOs were scams and that they could not deliver on the promises that they made to investors. ICOs began in 2014, but exploded in 2017 when software to run an ICO became standard. The drop in ICOs is one of the latest signs that the crypto boom of the past years has gotten ahead of itself. Potential investors are shying away. Their previous enthusiasm is becoming skepticism. Investors are shunning away from ICOs not only because of their failed promises, but also because of regulators frequently clashing with ICOs. The SEC has been investigating ICOs for the last couple years, and the Commission has issued several enforcement actions against crypto startups, showing that it regards some ICOs as securities, and therefore they must abide by securities laws. According to a report by BitMEX, at their respective trading highs, the hundreds of small startup ICO tokens had about $24 billion worth of cryptocurrency and cash in their treasuries. Since then, that number has dropped to less than $5 billion, largely because the tokens have lost their value. Furthermore, many ICOs have shown signs of fraud. For a little more perspective, ICOs raised almost $1.9 billion in March of 2018, whereas in March of 2019, they raised a very abysmal $30 million. Our next bit of news comes from one of the world's largest makers of cryptocurrency mining equipment, Bitmain. Bitmain Technology's application for an IPO in Hong Kong has reached its 6-month deadline, and the application has lapsed. On Tuesday of last week, the company, which sells chips and hardware for Bitcoin mining, said that it would reapply to list in the future. At the time that Bitmain announced that it would apply for an IPO, analysts and investors expected the company to raise at least $1 billion. The company was quoted saying, "The bear market at the end of 2018 brought both challenges and opportunities that Bitmain will work hard at addressing in 2019, end quote. The company said that it has appointed Haichao Wang as its new chief executive. The previous CEOs, co-founders Jihan Wu and Mikri Zhan, will stay at the company as directors and aid in strategy development. Bitmain sells hardware used to mine cryptocurrencies and also operates several mining pools where individuals combine their computer hash power and split any block rewards obtained from newly minted coin. When Bitmain submitted its listing application last fall, the company said that it had generated $2.8 billion in revenue in the first half of 2018. The profits in the first half surged to $742.7 million, up from $83 million the year before. The company also stated that it held over $886.9 million in cryptocurrency assets at the end of June 2018. Bitmain has been rather strategic with how it has approached the bear market. Seeing as Bitcoin is at a low price, they're not making as much money as they previously were. As a result, Bitmain let go several employees last year. The number of employees let go was not disclosed. In a blog post, Bitmain stated that it will restart its listing application process at, quote, an appropriate time in the future, end quote. A recently published report by Blockdata revealed that blockchain-based money transfers are more than 380 times quicker and almost 130 times more cost-effective than those of financial systems. The report shows that blockchain-based solutions may have a great impact on remittance payments. The report took a sample sum of 1,800 remittance payments, and Blockdata found that Ripple, BitShares, and Stellar Lumens could turn the industry in a completely new direction. Legacy systems for remittance payments can take between 2 and 5 days to settle transactions and charge fees that can grow over $10, whereas blockchain-based solutions are able to process transactions in seconds for less than a penny. The report shows that Ripple's technology would be able to settle transactions in around 4 seconds, while the remittance giant Western Union takes 3 to 5 days to do so. In other words, Ripple could settle around 100,000 transactions in the time that Western Union settles one. Ripple has already made substantial moves to take over the SWIFT system, and the research found that traditional remittance firms like Western Union and MoneyGram have already been experimenting with Ripple's services xCurrent to settle cross-border payments using blockchain technology. I'm personally optimistic to see how Ripple moves forward, as they're already making partnerships with several banks around the world. It'll certainly be interesting to see how technology like Ripple can affect major financial institutions like Visa. As it currently stands, each transaction costs on the Bitcoin network is somewhere roughly around $45. In the last year, there were over 88 million confirmed Bitcoin transactions with $264 billion in value transferred over the network. These transactions cost around $57 million in mining fees, averages about 64 cents per transaction, which is roughly 3 times the cost of Visa transactions. Another important thing to note is the transaction speed of cryptocurrencies versus the already existing Visa network. Bitcoin, for example, can only transfer about 6.1 transactions per second. Other coins like Ethereum can do 20, Dash about 48, Litecoin 56. Coin like Ripple can do 1500 per second, but Visa can process over 24,000 transactions per second. So what is the utility of using crypto as opposed to using Visa? Well, the answer is quite simple, and we can see it in our modern day lives. Just take a look at Venezuela. They had their big blackout, and the Visa network was down along with every other electrical network. However, people with money in crypto networks, their money was stored safely on the blockchain. As long as people stored their private keys safely, they'd be able to claim their money on the blockchain as soon as they regain access to the blockchain network. We'll have more information about the utility and scalability of cryptocurrencies in coming episodes, but for now, this concludes episode 3 of the BitTalks Podcast. My name is Brandon Rodriguez. Tune in next time.